Welcome to Proven and Probable, where we focus on metals, mining, and more. I'm your host, Maurice Jackson. I'm joined today by a special guest, Mickey Fulp, the Mercenary Geologist, and we're live at the New Orleans Investment Conference for 2017. Mickey, thank you for joining us today, sir.
Thanks a lot. 43rd annual, and the Big Easy is always a fun time, isn't it?
It surely is. Mickey, you did a presentation the other day in reference to the power of two, and we've discussed it as well. But germane to this time of the year, you also mentioned something about tax loss selling. Talk to us about that.
Yeah, so what we're seeing, and I just realized this in my weekly interview we just completed, metals, money, and markets, that we've started to see some people kind of front run this tax loss selling thing, I think, because the venture index was down all week. Popped up of 4 points, but still lost on the week today. But we're seeing higher and higher volumes. We're probably back to pre-normal volumes, which we haven't seen since maybe in the late spring. I think that's tax loss season. So we're seeing these people start to front run it, and I'm guilty too. You know, if you're going to tax loss sell, it's a good time to start right about now. You don't want to do it. Here's when you don't want to do it. In the second week of December, when it really hits home hard. And that was a bit of what we talked about in my speech on Wednesday evening.
And talk about that buying opportunity that you alluded to. There's a certain little sweet spot. Talk to us about December.
Yeah, so what we've done, and people, long-term listeners and readers of my work, know that we do this thing with seasonality. So we normalize charts for particular seasons from a year or even 2-3 months during the year. And we'll do that year after year after year. Normalizing means we start it, say, in this case, November 1, and we set our 0% there, and we calculate the daily changes in indexes and commodities, and we've done this over and over the years. And what we've found, and I kind of knew this in the back of my brain a few years ago, that sometime around December 15th is the real push on tax loss selling. And the Toronto Venture Index will hit a seasonal low sometime on December 15th, plus or minus 2 to 3 trading days. So that can go anywhere from, say, December 12th to even up to December 20th, depending on weekends.
Yes.
And we're talking trading days. But it'll hit this seasonal low. And that's solely by people bailing on these stocks as tax losses. Well, people will bail on really good stocks, let's say, that have had a high earlier in the year, and now they're in a seasonal trading pattern and a low, and they'll sell these stocks. And you can go in and pick up these really good gold explorers or gold miners very cheaply. Some December 15th, plus or minus 2 days, you watch the volumes. When the volumes really start picking up in these things, go in and buy them, and you can sell them in the first week of January and make money. Now, just on the index, which is a composite of 400 largest market cap stocks on the venture exchange, you'll see over our composite, since the exchange was created in 2002. That's a 16-year period. From that low on December 15th to a high, say, on January 5th, something like that, about 10% return on your money, if you could play the index. But what we do is we go pick off good stocks. And I showed too in my talk that you made 50 to 60% on your money by doing this on a short-term 8 to 10-day trade last year.
Now, I won't put you on the spot and have you mention those companies, but outside of gold, are there other sectors? Is it uranium that's catching your attention during this time?
It can be gold, it can be uranium, it can be copper stocks. It's junior resource stocks on the venture exchange, but you're playing the top tier and the really good, the cream of the crop sort of stocks that have seen much higher prices. I gave an example, and we won't mention a name here, but it will be on my website. My presentation will appear on my website under this event. A stock that had December 15th low in 2015 of 54 cents and had a high in 2016 of 335, came off, and you could buy that stock at $1.47 on December 20th and trade it at $2.40 on December 29th. That's a 63% return. So.
And who doesn't want that?
Yeah, exactly.
Now, let's switching gears slightly here. Talk about precious metals, because we've heard discussions here at the conference in reference to precious metals. Give us your thoughts right now. I see anomalies right now and distortions. What do you see?
Well, I see distortions in the fact that U.S. dollar's surging right now. So 6 of the last 7 weeks, the dollar's been up and gold's been down. So this downturn in gold from the high of I think 1350 or something yearly high hit in mid-September. 6 of the last 7 weeks, it's down. Or I guess that'd be early September was when it was. And 6 of the last 7 weeks, dollar index has been up. So I think it's purely a phenomenon of the strength of the U.S. dollar. I'm encouraged by the fact that Trump wants a weak U.S. dollar. It makes a lot of sense for the U.S. economy, especially trade balance, and we're hoping that he's going to not pick a new Fed chairman. Is going to be a hawk on raising interest rates very strongly, because that put the world, the U.S. and the world to hurt, I think. So I actually, seasonality of gold will demand that somewhere by about mid-December to the first of March, you're going to see a seasonal increase in price of gold.
Now, outside of gold, I'd like to get your thoughts on the PGMs.
Yeah.
What's going on there?
I don't really know what's going on. That's topsy-turvy market, with palladium trading at about a 4% leverage to platinum, and that's nearly unheard of. Last time that happened was in 2001, when the Russians cut off palladium exports, and at the same time GMC got worried about palladium, and they went in and bought a bunch of stockpiles of palladium, ended up with $1 billion loss. That's the last time we've seen this platinum-palladium ratio less than 1, and I don't think that's going to last very long. I think market economics, the reason people converted, or manufacturers converted from platinum in catalytic converters for gasoline engines and moved into palladium is historically palladium's been much cheaper. Platinum is a better catalyst. It requires less platinum than it does palladium at 1-for-1. So I think, and I'm assuming that conversion can be made fairly quickly, but if platinum stays below palladium, I think you'll start seeing more platinum use in catalytic converters.
Now, are you buying platinum right now?
I haven't bought any platinum for probably about a year, but if I were to buy on dips platinum or gold, silver, platinum, palladium, I'd be buying platinum, and really that's all I bought over the last two or 3 years is platinum, because it's undervalued with historical respect, not only to gold but also palladium.
And how about rhodium? I mean, we're looking at, a 50% increase almost here in the last year?
Well, and I think a lot of that has to do with the fact you can now buy rhodium bars, and you never could before. You could only buy rhodium sponge, and sponge it's not attractive, it's about what it sounds like, rhodium sponge. So the fact that you can now buy a rhodium bar, I think, probably increased demand for that. And rhodium's also used in a small way in catalytic converters. It's necessary, but a very small percent.
Now, I'm not going to ask for a number here, but do you see rhodium continuing on this trend, or do you see it cooling?
It's such a small market, and it's so speculative. Compared to platinum and palladium, which are very small markets to begin with, the rhodium market's minuscule. So I don't think the regular supply-demand fundamentals are really going to be in play there. There's lots of speculation. There's a lot of ability, I think, likely just using logic and science and reason that rhodium market can probably be manipulated pretty easily.
Well, Mickey, thank you for your time. In closing, please give us the website.
MercenaryGeologist.com.
Right, and is this a free subscription?
Yeah, free subscription for my newsletter. You get my stock picks. That's why you want to subscribe. We're going to have a couple of new stock picks here in the month of November, and some things I'm playing my own money into this, significant amounts of my own money. I think they'll be of interest to my subscribers.
What is the Twitter feed that you have?
It's at Mercenary Geo. We're up over 63,500 Twitter followers. Quite active on Twitter.
All right. And last but not least, please visit our website, www.provenandprobable.com, where we interview the most respected names in the natural resource space. You may reach us at contact@provenandprobable.com. Mickey Fulp, the Mercenary Geologist, thank you for joining us today on Proven and Probable.
Thank you, Maurice.
All the best, sir.
Thank you for joining us today on Proven and Probable. Remember to like and subscribe for more conversations with the most respected names in the natural resource space. Check out our website at www.provenandprobable.com. The information presented on Proven and Probable is provided for educational and informational purposes only, without any express or implied warranty of any kind, including warranties of accuracy, completeness, or fitness for any particular purpose. The information is not intended to be and does not constitute financial, investment, or trading advice, or any other advice. You should not make any financial, investment, or trading decision based on any of the information presented without first undertaking independent due diligence and consultation with a professional broker or competent financial advisor.